All right. Good morning, everyone. I hope you guys are doing amazing. I hope you as well had an amazing weekend, and I hope we are ready to see what the market has in store for us this week. Today is the 24th of November. We did have our first non-farm payrolls from last week. After about 40 days, we didn't have the September non-farm payrolls. We had the figures come out last week, and they were pretty shocking compared to what was highly anticipated. So just have something we can look at and build up on the after NFP effect. Just see how that may affect some of these pairs going forward. So let me just drive back a bit to 20th. We did see this, the forecast was 53K, but then we saw an actual figure of 119K, meaning that the labor market in the US actually, or in September, was actually very strong. Remember, we weren't able to get these figures coming into October because of the government shutdown. So it had that delayed non-farm payrolls for September coming in last week. So it being strong is basically means we are looking for some bit of bullish potential coming in from the dollar as an index particularly, right? And of course, you can expect to have some bit of strength coming in from US dollar pairs. So coming into this week, today is Monday. We don't really have any major news events that are really going to push much of the market. But the markets are pretty much going to be bracing themselves for tomorrow's core CPI, core PPI, sorry, as well as coming tomorrow, the retail sales and PPI are month over month. So these are going to be this week's major market movers. And today we are majorly going to see the market bracing itself for this. We don't expect any uncertain volatilities through this price action. As you can see, we just have a speech coming in from Lagarde later at 5:50 p.m. So that's basically just coming in from the other calendar that side on Forex Factory. And then looking on to what we have this side on trading economics, we have an article about gold and like see where gold is pushing. So that morning we did see it opened with a few points to the upside, but later dropped into a 4-hour zone that we are going to see later on. That was actually below the 460, actually below the 450 as well. That it pushed in, and we have had a big pump to the upside in the pre London open. London just opened 2 minutes ago, so we're going to go in and see. So here we say that gold price has stayed around 460 per ounce on Monday after modest weekly decline as investors awaited more US economic data for clear signals on the Federal Reserve's policy outlook. Attention will mainly be on September's retail sales and PPI figures due on Tuesday. Along the weekly jobless claims on Wednesday, expectations for a December rate cut have shifted after Fed President John Williams signaled support for another reduction in the near term. Markets are now pricing at 69%. So we had this figure at about 45% at the start of last week on how investors were pricing in a possible Fed cut, right? And for some reason, every time we are pricing in a Fed cut, certain pairs like gold tend to actually surge to the upside. That's something we need to pay attention to. Gold tends to surge to the upside whenever that percentage increases. If you remember going into the first rate cut he did this year, we had a 98% possibility of a rate cut, 25 basis points, and we saw gold pushing all the way. We saw gold pushing all the way to about almost 4,000, so almost 4,200 and something, so almost 300. But we saw about 4,000 pips moving in just a single week, based off just that investor anticipation of a possible rate cut coming in from that side. Then in case of any other market news you may need to look out for today, where you can expect some bit of volatility, you can check out on our terminal this side. Let me see. Currency pair latest news here. So we have Euro CHF raises on peace deal hopes. The Euro CHF pair has shown signs of recovery recently, edging above 0.93, buoyed by cautious optimism regarding peace talks in Ukraine. The stabilization of lower energy prices is adding to the euro's appeal, further suggesting that the pair could strengthen as market sentiments becomes increasingly positive towards economic recovery in Europe. So one of the biggest commodities in Europe is basically energy, and of course we all know that the Ukraine-Russia war highly disrupted energy flow, basically because Russia is one of the world's biggest suppliers when it comes to oil and crude and gases as well, when especially supplying to Europe. That became a very major factor to Europe's economy. We did see about 3-4 economies going to a near recession based off those factors there. So this aside, since we have no major news events from here, we can then dive into our technicals and see what you can have coming in from the technical perspective as well. Let me see what kind of coming in from the technical side, and where today's market opportunity will definitely be hanging around. So let me just share my MT5 screen in a bit. In the meantime, I'd like to remind you guys that this is not financial advice. We're just giving you insights on the markets, and kindly do your due diligence before you take up any trading opportunities. As well, we do have a special monthly webinar coming in tomorrow, Tuesday, at will be at 8 p.m. Hopefully, when many of us have been able to retire from our jobs and get back to our domiciles, we do have a special webinar tomorrow at 8 p.m. And if you'd like to be part of it, you can check the link in bio. It's in description as well. Then you can be a part of that webinar. It will encompass all of the educators at FXPesa. So there will be a great deal of information to be shared. Shall do some live market breakdowns as well. So you don't want to miss to be a part of that monthly webinar tomorrow. And as well, you can take advantage of the current Caribou bonus. That's a 100% deposit bonus on your first deposit. So you don't have your FXPesa account by the end of this stream. You can just check the link in the description and create your account now and take advantage of that. So now coming on the technical side, I would like to start with the dollar index. Let me just get it out up around somewhere here. Then we shall come back to gold and see what gold has to offer for us. So we're seeing that push to the upside. Nice one. So this was part of our analysis coming in from last week. We did have this resistance and we did speak about potential buys above this level here. So analysis is still in on the dollar index. And of course, we were able to come and buy right through that zone there. So you can see that the dollar index played out perfectly well based on our last week's analysis. So you can now be able to top up the analysis this week and see what we can be able to pick out from in terms of this week's perspective. So those that took advantage of how you can use the DXY in this perspective, congratulations to you guys. And yeah, just in case you didn't, of course, another week, another dollar, right? So let's see what this week has to offer from this side as well. So now let's start in from the daily time frame. So you can see that we're anticipating a break above this high here. That's where our main bullish bias came from last week. We do see that price came and attempted to break above, giving us a sweep of those highs. And in most cases, our price can tend to do a deep retracement. But in case price tends to do that, I'm not really going to be banking on a big retracement yet, unless today's kind of closes bearish. Because I'm basically looking for the weekly outlook at how the dollar may probably look through the week, right? But in case that today's kind of closes bearish, I'll definitely tend to see the dollar give us some bit of retracement into the zones, probably fill up this imbalance before it continues to the upside. But then this bullish momentum we see coming in here right now is majorly because of the non-farm payroll figures that definitely came out very, very positive, or that were anticipated to be higher than the previous, because we're having an anticipation of 53K, which was definitely going to be higher than the last non-farm payrolls before September. So that was already a good sign that the dollar would have had some bit of recovery. But then, of course, coming to 119K, the figure was, of course, positive. Price attempted to break this high, failed to close above it, and we are seeing some bit of reactions coming in from here, kind of rejection. So expect a push down, try and fill up these areas in case today's candle closes bearish. Going on to lower time frames to pick up some low time frame anticipations. What would you want to look for in this case? So you can notice that around these highs here, after price failed to close above this daily high, it's now in a bit of a consolidation, or it's ranging within those highs, as you can see. Currently is ranging around those highs. Let me just get in our box tool over here. Then we can have this. So we have this bit of a range that price is forming. So I'm going to mark all the wicks out to this extent. This is the range that price currently is forming. So of course, sometimes price will tend to do this, especially like we have the PPI coming up, can tend to do that as it waits to see what anticipations or the PPI comes out to give us a definite direction of the dollar. But what we'd love to see is a break above this area here to continue pushing us to the upside until we get a 4-hour time frame shift to the downside. Then we can anticipate a deeper retracement. All price can as well be able to give us a break below this zone. Then we can waiting for some selling opportunities, probably target this demand level on the 4-hour before we anticipate some more bulls as well. So when price comes to this, at the zone I marked on the daily time frame down here, price would have filled this imbalance. And of course, price had given us a small internal breakout at this point here. So that means the 4-hour area here would be responsible for that internal breakout here. And these are the very nice imbalance as well. So it's one of the two perspectives you're going to have when you're looking at DXY. So if we see a nice break above this consolidation, of course, with a candlestick closure, I always stick to a candlestick closure personally. I feel like it gives me more definitive direction than a structure and a much more clear perspective on how the market would be attempting to move as well. It's important. So in the meantime, I'd like to send a special shout out to our first viewers in. Good morning, Rachel Kamau, Evans Oskini. Good morning to you. Good morning, Joey Tech, and of course, yeah. So morning as well to everyone who's tuned in. So let's see how this would play out. So let's the dollar index. We're having this area. It's going to be like our no trade zone like we had last week. You wait for that nice break. Remember, this is just basically setting a perspective, or it's setting for you a possible bias for dollar related pairs, right? For dollar related pairs and where they could possibly be are pushing to through the week. So having seen this, we can now move into our Euro USD and GBP USD. As we always tend to break down, let's get Euro USD here. I need so let me add it to my view here. Let's see market watch. So let's get Euro USD. Where is this? Okay. Right, so let me add it up here in my market watch. I don't seem to see it. I see gold. Okay, let's add it up here. Then you see what your USD and GBP USD could definitely be able to offer us. Euro USD. There it is. Then you add JP USD as well. All right, so let's get to these and see. I think I just have a lot of pairs here. I'm failing to get the ones I want. All right, so there. All right, so let's get now a template for this. Right, so it's your USD. Let's have a look at what I was looking at on a daily time frame. So it's a daily time frame on your USD. We did anticipate a push to about these levels here. We had a level here that we're anticipating price to push to. From what I recall, it probably missed this area by a few pips, as you can see. So the target area we're looking at in the daily time frame, as price was forming lower lows and lower highs. And our anticipation that price would definitely come all the way down, probably take out those lows or continue after this retracement here. So as you can see, this low here is still very much intact, but price already factoring in some bit of possible retracement. And of course, one thing you should keep in mind is that, of course, if the Ukraine Russia deal is still looking positive, that would mean that the euro itself will give us some bit more of a recovery as well. So there we are seeing a very big push in the London Open to the upside that you can want to factor in. So if it's pushing to the upside, this will always be able to align with a DXY's anticipation of going for a deeper retracement. So when you look at the zones available, up and down, a price is coming off this demand zone here, or this breakout level we had on the left-hand side on the 4H. So our price is getting that bullish momentum from. We had this breakout here on the 4H. So it's first taking the push to the upside, and you can look at the range that price gave us from this area to up here. So you can expect a push if price closes above this area, hopefully to about these demand levels up here. But I feel like most of these demand levels have been used up. We have just this supply levels. We have this one right above here that price would probably want to target. But let's look at some bit of intraday perspective. Let's look at the intraday perspective and see where we can pick up some bit of opportunities. So this perspective would definitely support a dollar retracement to the downside as the euro pushes to the upside as well. Of course, the euro is being backed by fundamental factors coming in from the Ukraine-Russia situation. but that doesn't stop us from looking for opportunities. When I come a bit lower to a 30-minute time frame, so for now, the supply level is not one where I'm basically going to be looking for sales, but it's going to first be the target area, right? It's going to first be the target area. You want price to come all the way up here. So I'll mark the QM level there. And what you're pushing for is for price to definitely push to this area here. And definitely either break above or give us bearish confirmations. We can see that price came and rejected this demand zone, started giving us a bit of a bullish liquidation, gave us a breakout, a retracement, and now we have had this pump to the upside on that current 30-minute candle that you can look at from there. So on facts that this candle closes bullish, I would expect to see a push all the way to this area here, a push to all the way to the areas here by the, probably throughout the London session. We expect to find that bullish move all the way to this area here. Probably price may fill up this imbalance, then continue all the way up here because of the momentum I'm seeing from here. Then within this zone here, I'll either see if I can get a 5-minute shift to the downside. If I fail to get that, price can as well definitely break this and then push to the upside. Now, if price breaks above this level here, we're definitely going to be targeting the next 4-hour zone. That's going to be all the way up here. That's if price breaks that area. So I've just refined the supply level to the best possible zone or the minimal zone. When I do a refinement, the area I would like to take my opportunities from on that side there to like to be within this zone here. On the other side, you would mark the whole demand level here like this, the whole supply level, sorry. But I just refined all the way to the QM level here because I tend to like using the QM levels a lot. So you can expect to see this push up all the way to this area here, probably a breakout, 30-minute candle closes in the next 15. Then the next give us another bullish push all the way to this area here, filling up the imbalance left here after this correction move. Then within this zone, I'll look for a 5-minute, a bit of shift pattern to see if we can push price lower all the way to the 4-hour zones. But just in case you understand that the fundamental bias would be bullish, but I would like to pick up on a bullish momentum before either price gets to this level or after price breaks above this level to push me to the next 4-hour supply level. It's where I would like to pick up some bit of bullish opportunities. I find those are much more easy after price breaks above. Of course, with a candlestick closure, I don't want to take the sweeps because when price sweeps are high and fails close above it, this is what tends to happen. Price tends to go for those deep retracements, either to the next level there, and sometimes would even definitely change direction. Whenever price just has a candlestick, a breakout, line stick breakout, line wick breakout, with a wicks, breaks out with a wicks, not with a candlestick closure. So my preference will definitely always be a candlestick closure above highs, previous highs and previous lows. Then I can tend to know that either it's a bullish perspective in play or a bearish perspective in play. So in terms of Euro USD, that's what I'm looking at. This candle closes bullish, then price tends to push to the upside. Can probably look for some bit of continuations on a 5-minute, but based off the momentum, it's going to be very difficult because we're having a current resistance level here as well on the 5-minute time frame. But I'm hoping to see that price closes above this 5-minute resistance level. Then now we can see that push continuing all the way to this area here. And then from there, we can now either see if we can get a bearish confirmation or not. So having this resistance that's currently holding price, and you have seen that push right through it. So a good candlestick closure here on the 5-minute means price I would definitely want to target the area right above here as well. So that would be what I'm looking out for on a Euro USD. Then we can move on a bit to GP USD and see if we can share an alignment in analysis or in directional bias of the two pairs. So let's bring this all the way from the daily. So even the weekly can give you a perspective. The long-term perspective, of course, that the dollar is still strong. That means pair can still be bearish. We saw last week closing a bearish candle, and then we are seeing at the daily time frame was giving us a bit of retracements. Now, when you look at the daily time frame on GPUSD, we do have a supply zone. We do have a supply zone right around this area here. That price may look to retrace back into. I don't know if you're seeing that. So these pushes we're having to the upside, it's more of a correction move after this impulsive sell that we had the first time. If you remember getting on JPUSD, but for time and time again, I've been mentioning that JPUSD tends to have a bit of more direct structures. Price is able to come and actually hit this area and reject it, then close above it. And now it's giving us this correction move. So let's see how far the correction could want to push to the upside and see if there is a way we can pick up some bit of bullish opportunities leading to that area there. So now this is the zone I had marked out on the daily time frame. And when you look at it carefully, you realize that there are no really fresh supply zones. Most of them have been consumed, except the last supply zone right before the breakout, which is this zone here. Now it's a 4-hour time frame. So this is the zone that we are having. And now when you look at the price action that price is giving us after reaching this demand level here, it's giving us a correctional move. It's kind of a correctional move. It's like a sideways correction. How do I put it? Like a sideways retracement, but it's going up. Not so aggressive, not so what, because we have a very impulsive move to the downside. 1, 2, 3, 4, about 5 candles pushing to the downside. But you can imagine in this correction move to the upside, we have about 1, 2, 3, 4, 5, 6, 7. We have about 11 candlesticks giving us this correction move to the upside. And now coming down to what we look at in the price action here, our price is gaining some bit of bullish momentum because we have a drawn liquidity, which is the supply level here. So we'll have that level there acting as a drawn liquidity, the supply level that price wants to get to. And when you look at how this 4-hour candle has actually formed up, it shows a lot of bullish momentum. We had a bit of sales coming in at the 4-hour candlestick open, came all the way down here, almost swept out the whole candle, quite didn't. Then we are seeing buyers are taking over just within the same time frame of this 4-hour candlestick, meaning there's a lot of bullish momentum within that area there. So coming into the 30-minute time frame, you realize now the structure is starting to look a bit similar to the one on Euro USD. Starting to look a bit similar on the one on Euro USD. Now it's on a 30-minute time frame. So once again, we can be able to just mark out the resistance that price is currently rejecting on this particular pair. So we have this resistance area here that price had formed. So you can see that that's the level that price had formed here. Price came and retested it the first time, gave us that rejection, coming back lower into this demand level here. If you're able to see this demand level here, that price came back into, then we have seen that impulsive push, right? The candle hasn't quite yet closed. We'll be closing in the next 9 minutes, but we had that impulsive move. So once they have breakout of this level, for price to push all the way to that 4-hour supply level, so you can refine this 4-hour supply level. You can be able to refine it. So I'm going to refine it all the way up there. So then you can go to the 5-minute and look at how strong this resistance could look like and what will basically transpire if the price doesn't quite get into that break above that resistance. So yeah, you can start to have this high here on the 5-minute. The Euro USD gave us a whole linear resistance. All the resistance was much more easier to see on Euro USD. Here we have a high, a strong high, as you can see, because price forms a high low, higher high, then it starts pushing to the downside before it shifts. Now we have GBP/USD finally pushing to break above that resistance area, from which you can now start looking for some bullish opportunities, probably push us to this level here on the 4-hour time frame. We'll look at the range between this area here. These are about 30 pips. So a good 15 pips cannot be so bad. 20 pips are enough as well. You can go in for like a 1 to 2, a risk to reward ratio on a breakout like that as well. Then when price gets to this, we see for a 5-minute would give us some bit of bearish confirmations or some intentions to definitely price lower. Other than that, we can still expect some bit of recovery on these pairs, especially GBP/USD and Euro USD. If at all what came out in the news today morning, which is the Ukraine peace deal looking like a possibility or being pressure for it to actually push through, then we can have a price break above this zone here. Remember, that's a 4-hour zone that we refined to a 30-minute time frame. It was a 4-hour supply level that we refined to a 30-minute time frame, and then it's giving us that. But when this candle closes bullish, you can still expect some bit of bullish momentum going into probably a retracement coming in like towards the New York Open. Then we see price can continue pushing us to the area above here. Probably take out these highs in between. Then we can continue all the way up there. So when you look at this carefully, GBP/USD, Euro USD, and DXY have a similarity in structures, or they are giving us some bit of correlation, right? We have some bit of correlation coming in from those 3 pairs that we tend to want to see how they can give us a correlated bias as well. So now having looked at your USD, GBP/USD, and USD/JPY, let's look in a bit at let's look at we didn't look at USD/JPY, right? We look at USD/JPY as well. Then we shall move into a bit of gold, silver, and most definitely US 100 or US Tech. US 30. Let's see. USD JPY. What's up here? All right, so this is our USD JPY chart. So you can start USD JPY has been bullish for most of this year. For most of the year, all the way from April, we've started seeing that correction, that push to the upside. Because as the dollar was recovering, we kept seeing this pair going to the upside. The dollar strength means that US JPY will be up, and then the post JPY will be down. Coming onto that daily time frame, we see prices trying to factor in a correction move, and look at the daily area that price would want to target. If it confirms a nice daily push to the downside, we'll have this area here. This would be the demand level that price would want to target, and see if it's able to continue its bullish move or it's going to turn a bit bearish after breaking that zone. So if this is the area price is targeting, then one first factor in and see, do we really have any intentions of lower time frames showing us that price is going towards a retracement? So going into a 4-hour time frame, we would have loved to see a shift pattern here, but we haven't quite seen a nice shift pattern pushing to the downside. So I'm going to base more on the current price action I'm having here. So when I look at this price action, other zones available in the most recent price action, I'm going to mark the current supply level that we are in. That is this, but it's trying to push our price a bit lower. And why I'll mark this and then the one above here, even if the pair is bullish, is because when you look at the dollar index, we are trying to it's trying to give us some intentions to actually go into a retracement. When you go back and look at this dollar index, look at it's trying to give you these intentions to go lower here. Now, what does this mean for USD/JPY? It means USD/JPY will definitely go a bit lower as well. And now, when look at the zones available, it's on a daily time frame. So we can look at the DXY in the 4-hour time frame. It's on the 4-hour time frame, right? Also pushing to the downside after taking out these highs or sweeping those highs there. When it comes to USD/JPY, we would expect it to share a similar perspective, leaning to the downside. And right now, what do we have? We have it rejecting a supply zone on the 30-minute time frame. So of course, if it rejects that level there, closes below it with a nice, good rejection wick, that would mean that sellers or bearish bears have probably come into play, and they're looking to push price lower and in alignment with the dollar index as well. So we go to a 30-minute time frame from here. As you can see, both the pairs, both are the DXY and USDJPY. Sorry, Euro USD, GP USD. For them, they push to the upside. The other impulsive candle here on the 30-minute time frame, and this same candle, when you come to USDJPY, it's the opposite direction because of the inverse correlation, right? It's, because of the inverse correlation we are having. Now, this is the supply level we are currently on, and if you wanted this area to give us some nice confirmations, we expect to find a nice confirmed shift either on the 15 or the 5-minute time frame that will confirm bears. Other than that, this was a correction move, a nice correction move to that supply level, where we got some selling opportunities coming into a 5-minute time frame. You do notice that price has attempted to give us a shift to the downside. That could, of course, be able to offer us some bit of opportunities in the market. So let's see if price is able to close below this. We can then expect to push it, for it to continue pushing to the downside. Here alone is a nice retracement, but you want to pay attention to the long rejection wick that price has formed, the exhaustion wick here. One, pay attention to this. So I would like to see a wick fill on this area here on the next 5-minute, on a rather wick fill on this 5-minute candle, or price that are coming in to violate this area to negate the bullish momentum coming in between. But based on the bullish momentum coming in, of course, if price comes and breaks above this level here, that with on a 30-minute time frame, then we shall now start leaning back to the bullish side on the DXY, on the USD/JPY. I would like to refine the USD/JPY to this supply level above here, the extreme supply level. That's fresh. It's the extreme fresh supply level. So of course, a break above that area would mean price is pushing back all the way there. But then, of course, you can see that bearish momentum is trying to come in, and the market's having really some bit of reactions around this zone here. So, want to watch just more the 5-minute time frame, and you have a small intraday areas where I want price either to break out from, then we can be able to take our trades as reactions to what the market is doing other than predicting, right? We want to take our trades as reactions. So this is like a level where we want to see either price break above and continue, or it comes and fills in the gap to the downside the week of this rejection bearish candle here, because price came in with strong bears and then it rejects, comes in a bullish candle. So want to see which side is more dominant. Do bears continue to push the market lower, or do bulls eventually come in and try to give us that push back to recover the downside move from the dollar today so far that it has given us in today's early morning open as well. So this would be USD for the 5-minute time. So price attacking this area here. We'd like to can break out and give us some push above, probably push us above this area as well. The momentum is picking up on the dollar side as well. So this is as far as what I'm saying on USD JPY. Then we can just have a peep in at GP JPY to see if it can share a similar perspective, because they basically both share the JPY. So JPY, you want to factor in the fact that European pairs might have started the day a bit strong based off the news coming in from the Ukraine situation. They recently decided on a bullish note. So look at JPY, we realize that it's also giving us a correction move to the upside. This is on a 4-hour time frame, but hasn't yet quite gotten to the supply level. That would be like its drawn liquidity. So what you can say, when you look above here, we have this supply level here that price engulfs, and I'm going to just refine it to this area in between it. I want to find that area in between it. So I'm seeing price attempting to correct us back to the supply level that was responsible for this impulsive move, or where those bears came in aggressively. So on this correction move, we can use that perspective of this being a drawn liquidity to try and see if we can come up with some low time frame opportunities, especially for intraday, and just in case where we can be able to see in case market happens to change sentiment. So I like the correction I'm seeing here, so I'm going to just supplement on a trend line, because the correction I'm seeing here is actually very, very nice. So it can be like more of like a guiding tool. So we did see on this correction move on the 30-minute time frame, price did offer us a breakout to the upside. Then price moved in about 2 candles and gave us a first doji. Then the second one actually came inside this area of liquidity and then formed that kind of pin back candle that closed a bit bullish as well, but a pin back. So what we'd like to see is on the next candle here that's starting to form. It's now 2 minutes in. You see if price can factor in more bulls, right? More bulls to push the upside. We still have a zone around here that can still hold price to the upside. You have this demand level here that will still push price above here. Then besides that, a break below this trend line, as well as so on my trend line breaks, I never use a trend line on its own. There's a video where I actually explain why I don't do that. Where when I have a trend line like this, I'm going to come and look for the demand levels that are aligned with a trend line. Then when price is to change direction, I have to break both the trend line and break that level right below the trend line. In case it's up or down, price to break that trend line and then break the supply level that would be above that trend line, because then I would just be building up more confidence, and definitely you definitely have more reason to probably take that trade, because you have a number of confluences showing you the same perspective or preaching the same direction. So that's something I would want to watch out for in terms of GPJPY going into this. Okay, we're now 30 minutes into the London session, so I can't really that much. So then we can now look at gold. We can now look at gold for a bit and see. So let's get gold from the daily. Let's look at the weekly as well. We have been seeing it in a correction move of late for a couple of weeks. We've been seeing it giving us a correction of those aggressive pips that took us all the way to 4,368. So right now, when you look at this week's candlestick, it began with some bears because the dollar began a bit more strongly, and as well the equity markets were doing amazingly well. Basically, because the Fed hinted on a possibility, they told that President Williams hinted on a possibility that we may still have a possible rate cut, despite NFP looking so strong, right? There's still a possibility of having a rate cut in December. Now, the equity markets reacted to that. And when the equity markets react positively to that kind of news, this means investors are taking their money out of a safe haven and investing it in these equity markets. I don't know if you get the idea. That's why many times when you find equity markets doing so amazing, you're going to find pairs like gold are going lower, right? Because people now take their money out of a safe haven. Gold is simply a safe haven. It holds value for a long period of time and it has tended to appreciate for the past 40 years. But then the other pairs, the other equities tend to have more tangible ROIs and more scalable kinds of investment. So investors tend to take their money out of gold. So we tend to call gold a risk-on asset in terms of how the investors think of it. It's more of a risk-on asset. When the risks in the macros or in the markets are so high, investors come here to look for safety. So that means when those risks are downplayed a bit or reduced, investors will get their money out of gold and put in those more riskier assets when they put when the risk is now off, they now invest in those equity markets. So now coming into this daily time frame, we can see that after Friday we had this kind of indecision candle here. Price is rejecting after coming into this breakout zone on the daily, whether a breakout zone or a structure. We have this bullish structure here, called a breakout zone. Price was coming from it, gave us this nice rejection bullish candle. Then the next candles there were a bit of more of indecisive, right? So usually with indecisive candles, if you're looking at a long-term perspective, the one thing you want to look at usually is having, like, let's say this candle either closes bearish, show that bears have taken more charge of the indecision area or the prices in the indecision, or you want to have a bullish candle, like a solid bullish candle, show that, okay, now buyers are in play. But now that you haven't formed any of those yet, we would like to see either price, this is now the long-term perspective, either you see price come and then close below this side to look for bears, or you see price come and close above that indecision candle to look for some bit of bullish momentum. So that happens whenever you find these kinds of indecision candles in most cases, right? But now that we are still on a daily time and we are looking for intraday perspectives or short-term moves that could happen, day trading opportunities as well, we can then factor in lower time frames and see what they're actually signaling as well. So now coming a bit to the 4 candles time frame, sorry, we said price did give us a breakout right around this area here. We have that break. Then now price came into this correction move where we had a lot of indecision happening. Coming into this price action, we saw an attempted break above this, but then it was a candlestick closure that eventually closed there. So price tends to go for deeper retracement. So of course the 30-minute demand level here, that price came in to actually start giving us these buying opportunities that we are seeing coming into the market today. So you can see that this demand level is available here on a 30-minute time frame. Let me just mark it out. Let me just mark this demand level here. The guys that have been to the classes, it's a type 2 demand level. And you know it as one of the best types of demand levels you want to look out for to give you some bit of opportunities as well. So the market came into it, rejected it the first time, rejected the second time. Then we started seeing some bulls are picking up. So currently, when you look at the 30-minute time frame, price is giving us some bit of reactions of the supply level. But I'm anticipating that, of course, if the dollar is going to also supplement, I don't compare the two, but the fact that the dollar may tank a little bit sometimes can affect this as well, but not a lot. Usually it comes from a macro perspective when they perfectly align. They don't always align, but usually it's from a macro perspective when gold and the dollar index tend to kind of get some bit of alignment, right? It's always usually a macro perspective. So you find that news events push it to the same direction and sometimes giving you the similar or same after effect. So you can see we have this supply level, but I'm honestly looking for price to break above it, because once I break above it, I know that price will be coming to see or to first target this area. Now there's levels in here that want price to first give us before we kind of think of gold being generally bullish, right? Remember, I wanted to close above this area because this is the week from Friday's high where we had that indecision candle. This was the week from Friday's high. So for us to be bullish entirely for the week, or to say that gold is now strongly bullish, we would want price. Let me just first label this area here as Friday's high. I'm marking the Friday's high because it was an indecision candle. And we want to see the price closing above that Friday indecision candle or closing below Friday's indecision candle, right? If it closes below, that means sellers have come into the market and they are probably taking dominance. If it closes above that area, we want that price, we will set sorry, close above, buyers are in control. If it closes below, let's mark a Friday's lows. Friday's lows were in this area here. It goes below Friday's lows, that means sellers would have come into play. So right now, I think with gold, personally, I'm just much more focusing on what structure is price giving me at a time. I don't advise really predicting this as well until we get enough economic data coming in, because gold's long-term moves are highly determined on that data. Long-term moves highly determined on the data. If we see that percentage of a 25 basis point anticipation moving, as we saw in the article earlier, it's at 68%. If we see it pushing to about 70, 80, then you're going to expect more bulls in a pair like gold, because you're going to have investors taking their money out of gold and putting it in equities, because the rate card favors equities a lot, and putting some in the US bonds as well. Then some will actually, they'll be taking it out of the bonds, putting it in equities and in safe havens. That's if the percentage or the anticipation of a rate cut keeps increasing. They'll take their money out of gold, because the rate cut favors equity markets a lot, but doesn't favor the bond markets, doesn't favor the currency itself when they're cutting rates, but favors the economy as an entity. So that means the economy to be favored, the companies in it are going to thrive because of lower interest rates and much more easier borrowing, right? So if that's easy for them, the investor will take their money out of the bonds that want to look favorable during a rate cut and put it where it's favorable. That will be gold as a safe haven for those who want to put money in equities, and then others will run to equities because the ROI, or the way they get money out of equities, is much more productive, has a higher return on investment in simple terms compared to gold, because gold appreciates and depreciates, but then it's just more of a step of a safety, it's just a safety net for them, for the investors. So this is what we are looking at on gold. We're currently in a supply level that I would personally love price to break above. And if prices to break above it, let's see what it would look like. Right now, we're having a whole consolidation happening on a 5-minute time frame when you look at it carefully. So I'm going to just mark the high of this area here. Then I'm going to mark out this consolidation for guys who are looking at intraday perspectives. Of course, we're in the London session, so there's a bit of volatility in the market. Volume not so much because it's a Monday, but volatility is there because, of course, participants are in the market as well. Let's get a rectangle tool. So this is the area where we're seeing some bit of consolidation. I won't just put it down to this. And so if you get a candlestick closure below this, of course, shall push definitely lower, probably to this demand level here. The thing with gold is that it will look like this is a short move, but because of its pip value, it's actually a very, very good number of pips that can catch in. If gold breaks below that area there, you can have a push of about, these are almost 50 pips. So intraday, these are very good pips. If it breaks above, you don't target this high to be taken out, right? To be taken out and target this area above. Then I shall have a look at probably almost 200 pips. This will be about 200 pips as well. So I'm watching out for. So I will really fancy a break to the upside, because I'll feel like I have a bigger free zone to the upside compared to down here. Down here, I have a supply level, a demand level right here, and one just shortly after that. When I go to the upside and bears take control, they'll take out this area, and this is the next most valid supply level I'm going to have. So here I have a 200 pip range. To the downside, the first area is only 50 pips away, which is not somewhere you're going to really capitalize from a lot in case you take an opportunity, because you have to factor in, of course, you have to factor in your risk and your potential gains when you're coming into the market. You need to know how to set your target on a particular pair, and also how to protect yourself. Very, very important things. In fact, in tomorrow's webinar, we're going to be doing, I'll be giving out a Notion journal template for guys that will be interested in it. To be available tomorrow. So we are seeing these bulls coming in nice, and hopefully are going to take out this consolidation to the upside. It's been indecisive from about 30 minutes to that London Open, and it has pretty much been within this ever since the London session actually opened. But let's see how it goes in regards to that as well. So another thing I'd like to explain is usually why do I lean a lot on having a double perspective when it comes to doing my analysis. Having a double-minded perspective, or being open-minded in quotes, always helps us to kind of like, how would I call it? As a trader, usually there's a scenario where we reach and you have a bias and you believe you've done everything right. Oh, I was bullish, I was this, I was that. My analysis said this, right? But remember, we are retail traders, we're not market movers. The market movers can change this market at any given period in time, right? So the only thing for you can be able to know that the market has changed is going to be the charts. So sometimes they're going to come in and let's say an event happens, breaking news happens somewhere, then you find a pair changing direction. Yes, you did everything right, but then the pair changes direction. The reality is that the only way the charts themselves have to, like, I would want to say speak to you, not in a cringe way, but the charts will give you like a message that, you know what, I've changed my direction, I've changed the bias. But because you woke up in the morning and you had this fixated mindset, because because of your analysis and all that, because you had a fixated mindset, you're going to find it hard to adapt to the new structure market is giving you. So whenever you do analysis, it's okay to know that I'm bullish today, I'm looking for buying opportunities, but it's good to give room in case the structure turns bearish, because we're not market movers. That's the reality of it. So for those of you that have read the PDF, Trading in the Zone, Mark Douglas speaks about it, and it's actually a whole chapter called Thinking in Probabilities. Thinking in Probabilities, and if you've been trading long enough, you definitely know that the biggest mindset you need to have is a probabilistic. The English is very hard. Is the mindset of probabilities in simple terms. The mindset of probabilities is what's going to get you where you want to be. Because even when the market changes, you're able to change with it because you're going to react to what the market is giving you. Definitely going to react to what the market is giving you. Now, here we have a US 500, or you could call it the S&P 500. One of the most amazing indices you can look into, or indexes you can look into, if you're looking for if you like volatile pairs and gold is really not giving at the moment, or you're scared of gold, you can always look at this. So here I'll be looking more for a breakout of this level here. Definitely push me all the way into these zones. Then in terms of what price is doing here, I'm going to have something like this. Based on the price action I'm seeing, price was forming some kind of like this triangular thing. I don't know if they call it a pennant or whatsoever, but there's a way they call it. I remember from my candlestick Bible. But right now I'm focusing more on the price action. So when I look at this up area here, I'm going to have some kind of like support level here. I don't know if you're able to see support level here. There was some kind of support after this gap up. So based on what I'm seeing, if price closes below this trend line or breaks this trend line and closes this level here, I'm going to just make it a bit wider because we had a gap up here. So I'm going to make it a bit wider. So let's say price comes and breaks both the trend line to the downside and breaks this level. Then we can have some bit of a zone that price may want to target to the downside. But as I said, it's always easier to trade free zones other than trading these kinds of areas to the downside or anticipating for them. And the fact that price gave us a rally, this could be like your base consolidation. Price is basically just gathering more momentum, either to go lower or higher. But price rarely reverses from a consolidation. It rarely does that. It can do that, but it rarely does that, because you can see what happened here. Price came consolidated, pushed to the upside. The reversal mechanism here would be the Wyckoff schematic. For those of you that are definitely familiar with Wyckoff, this is a perfect example of how the Wyckoff schematic looks like. But looking at where price currently is, I'm saying this because the momentum is bullish and the equity markets are actually looking bullish. Wall Street is green right now. And when Wall Street is green, the S&P 500 has to be blue or green as well. US 30, expect for it to be blue as well, because these are indices of those companies. So if those companies are looking good, or they are being bought into, or they are rallying, we expect these indices to indicate that on the charts. So we can easily look for a break to the upside through this. Then we can look for opportunities after price closes above this area. Where I would love to see a candlestick closure above this area is because we had some bit of retaliation as price came into this. Even after this gap up here, price still came back down, never reached there, and so this becomes a strong resistance level here. So you want price to definitely break above it. Then we can anticipate or look for those buys, probably through the New York session or the New York Stock Exchange open as well. That will be about 5:30 p.m. East African time, ever since the daylight zone of course shifted. And what would be your target to the upside? So the first target I really want to look out for is going to be this level here. It looks like a breaker block, or it is a breaker block for guys that do smart money concepts and a bit of ICT. So that's an area you'd want to target out in simple terms, in case in the events that price closes above this area here on the 1 hour time frame. It's something you'd want to look into in those regards. So this is US 500 or the S&P 500. So let's look a bit into NASDAQ. NASDAQ is one of those interesting pairs as well to watch. And one of the things that easily drive an edge on these pairs is understanding a bit of the equity markets, not understanding them deeply, but understanding how they actually function. Because right now I'm going to be focusing on these pairs just on the fact that the equity markets are looking bullish today. It's enough to give me a bias on US 100, US 30, the S&P 500. I mean, they get easier than that, I think, in my perspective. I don't know about you guys. You can chat me in the comment section and let me know if you can find that easier. But it's always very interesting just to know what some macros mean for these indices, because indices can be the easiest way. You can actually do some simplified analysis. So based off of that, we can see we have a very beautiful range on NAS 100 or on NASDAQ to the upside. And of course, the next level where we could target would be this area above here. It also has a similar resistance to S&P 500, very similar resistance, very similar structure as well. And yet they are all reacting to what's happening on the equity market. So equity market will show you, then its results will reflect this side where you can actually take advantage of. From a retail perspective, I think that's very, very amazing. I don't know about you guys, but that's quite amazing. So our closure above this area, still target the same thing. It's that simple, right? When you look, the structure is exactly the same like on the S&P 500. This is something that you cannot fail to unsee once you just see how to correlate these pairs here. So it's NAS 100 and it's having a very similar structure with the S&P 500. So of course, when you talk about NAS and S&P, we need to look at US 30 as well, or the Wall Street Index, right? The 30 top companies in the United States economy, the 30 top companies. So when you go to the US 30, one of the things that tends to happen, I don't want to guarantee you that it always happens, but it tends to happen, right? It tends to happen occasionally. Sometimes it won't be as people expect it to be. It's 100 roll US 30 roll. Okay, we have it here. I want it to be like I was saying, there's always a perspective or something I've heard a lot, both of course on YouTube and everywhere from other gurus, that the NAS 30 usually leads the NASDAQ, right? But these are things that happen occasionally based on certain circumstances. So you can't really rely on them to do like a comparison. And I've seen a lot of people making that mistake a lot. They want to use this to actually rely to see what's going to happen on NAS 100, right? But what we tend to do is we can do what we call a divergence. A divergence, compare the two pairs because they are correlated. And then when you look for a break in correlation, one of the pairs will give you a definite structure on how price is going to move. So you realize that now here we have something similar to the other ones, but not exactly the same. Instead of a resistance, here we have some bit of what? Trend line to the upside. Now here we have an actual. It's called a wedge. I think it's called a wedge pattern, right? Now with a wedge pattern, one of the things important to look out for, or how it's taught when it comes to pure price action, is once price points above it, wait for a retest and continue. But as I mentioned earlier, I like using confluence. I like confluencing pure price action and technical tools. So I would still want to have my resistance level there. Yes, we have gone above this area, but I definitely want to have price break above another strong level. Then I can know that buyers are in what? Are in control. A lot of times why people rush into these trades is because they have that form or the fear of missing out. Oh, that trade is going to leave me. But here's the thing with the market. When the market gets a direction, it will always offer opportunities for re-entry, right? It will always offer opportunities for re-entry. Now, when price breaks above these areas, you don't get scared. Price will always give you an opportunity for re-entry. So when I look at this, I'm going to just have this as a drawn liquidity, particularly because I'm having UT 100 on NASDAQ and the S&P 500 looking highly bullish, right? So in this case scenario, I'm going to want price take out this. We have a bit of an imbalance left, but I have a feeling price is most likely going to take out all of this. And given the fact that, of course, the equity markets are doing well, what will be left probably is for me to go and look at what particular major companies are very, very bullish. Because, of course, when you come to US 30, we're speaking about the 30 biggest companies. So US 30, usually why it becomes a bit different is because we're looking at fewer companies compared to NASDAQ and the S&P 500. The S&P 500, you're speaking about a global index of 500 American companies. 500. That means when you have like a half of them doing well, the index can easily do well. UT 100 or NASDAQ has 100 companies. That means when you have like, 40, even 40 companies doing well on the UT 100 roster, can actually get it bullish because you may find some of those companies having a very, very big marginal rise. You can have Nvidia having like a 4% day, a 3% day. Those will reflect on NAS 100. When you come to US 30, we're only speaking about 30 companies. That means there are limited sectors, limited companies. You could have NASDAQ having like 40% companies doing bullish, but the US 30 has like 5 of them or 8 of them. It will go into a consolidation usually until they pick up momentum. So that's one of the things you want to be very skeptical about when you're trading some of these indices, or for the guys who look to correlate them. That's something you really want to watch out for. So we can see take out this high, then probably target this supply level here, around here because it did give us a breakout. It led to a breakout and has some bit of imbalance that price may look to want to rebalance. When you look at this level here, if price targets this, then targets this area here. It's because we had a breakout on the left-hand side to the downside here and a very nice imbalance above. So this here, right here, this high becomes an inducement, becomes some kind of like inducement as well, right? But now it's just inducing that drawn liquidity. So that much that price will sell from there, just in case the equity markets decide to become so dominant as well and go into a high recovery. One of the reasons for that sell-off was, of course, the AI bubble scare. We had it coming in, I think, from the other week, coming into last week. We had that AI bust a bit. So yeah, that's what pushed these indices to the downside, of course, besides NFP. But basically, because right now a lot of industries are reliant on AI, highly reliant on AI. So this is what you can look out for today and looking towards the market pushing into this. So I think gold pushing almost break out of our consolidation. Hopefully it does. But in the meantime, I'm going to go through about 2-3 questions and then we see how the market pushes through that day. Feel free to rewatch this analysis. For those of you that missed last week's analysis and missed how the pairs played out, you can still rewatch it. The playlist is available. Feel free to knock yourself out and it's all there for you to consume. And don't forget to as well sign up for our special webinar coming in at the end of coming in tomorrow at 8 p.m. morning. Simon Gitonga, you had a fantastic weekend. Yes, I did. I actually did. Max Verstappen won the Las Vegas Grand Prix, and McLaren got disqualified. So yeah, the weekend was amazing. God came through. Kindly explain weird forex orders. So when you say weird, I don't understand by the meaning of weird, but I can explain different forex orders or execution orders. The orders we have what they call pending orders and limit orders. When I put a limit order in the market, for example, let's say gold is where it is right now and I want to buy, right? But I want to buy from this order block down here where I put my purple line. But I want price to come here, trigger me in, then go to the upside. I expect price to come there, trigger me in, then buy. What do? I put in a buy limit order. So if you're using a computer, you right click in the middle of your chart, you go to trading, then you come to new order, right? You press new order, you will have a tab. I don't know, you can't see this tab here. I don't know why it can't reflect that side, but you'll have a tab that will come up and then you'll be able to actually choose a buy limit order. I don't know why my tab is unable to come onto my main screen, but just in case, you can check there's a YouTube video on how to start forex trading in 2025. It explains all the different orders. They explain on how you can actually be able to use them and access them. So Simon, you can check out that video. It explains all the orders that you can use. Right now, I'm trying to click here, but I'm not getting that pop-up coming on my main screen, so I can't explain what you cannot see. So I don't know why it's not coming up, but yeah, you can check out that YouTube video. It explains how you can use the orders. Better take those shots. CAD CHF. Let me have a look at what CAD CHF is doing. Let's have a look at what CAD CHF is doing. So it still makes sense because, of course, Switzerland being in Europe and being one of the world's consumers of energy, if we get more positivity coming in from the Ukraine, Russia situation, then definitely we can look for some shorting opportunity. Some shorting opportunity on CAD CHF, because the CHF pair will definitely look to gain some bit of strength. So you can see it coming in there. Now that's a nice one. That's a nice one from African Sol. It's a nice observation out there. So yeah, the CHF being a European pair, and we saw that pair of this CHF of European pairs being a bit strong. You can expect that to happen. When you look at the daily time frame on CAD CHF, we are in a supply level on the daily time frame. And the supply level is an area where you can definitely looking for selling opportunities. We have this selling area here. You can be able to refine it down and look at what price is looking at. We had this supply level here on the 4-hour that has offered us a very nice push to the downside. We had the supply level here, offered us a nice push to the downside after that sweep. So you can definitely see CAD CHF give us some nice drop to the downside, definitely all the way to this demand level. It's the next fresh demand level I'm seeing around that. And hopefully we remain with the European Union being optimistic on the Ukraine-Russia situation. Looking at the price action on this 4-hour time frame, actually for a bearish 4-hour candlestick closure, would mean we are going to just lean bearish on these pairs through the day, especially CAD CHF, because it's looking very, very good. I don't think we have any CAD news coming out as well. I don't think we have any CAD news coming out, so you can easily see this coming all the way to the downside. Then you can look for the obstacle that price will have to break before it goes any lower. We have a rejection week around here, right? So this would be the first target you want to look at. These rejection weeks can sometimes offer us some bit of a push backups, or sometimes even act as areas of liquidity. Because when I go to a 30-minute time frame, it actually is some kind of area of interest as well. So when you look at this carefully, so looking at intraday perspective, yeah, you can look to see push CAD CHF to fill up this area here, come all the way here, and hopefully go below this area as well. Yeah, so thanks for that one. That's a nice one. It's a very nice critical analysis on CAD CHF. Actually, a nice, simple setup. You can take advantage of it as well. Thanks for that, African Soul. So I think I'll take one more question, then we can call it a day. I'll take one more question, we can call it a day as well. Gold, we did do gold. I was highlighted in gold a few minutes ago. Either I came later, you could also analyze BTC USD. So let's have a crash analysis on BTC USD. Since we're out of time, we're going to do a quick one on BTC USD in the interest of time. In the meantime, of course, tomorrow we are going to break it down, long-term perspective. For the guys who will be in the webinar, we're going to break down BTC USD. I personally will break it down, long-term perspective, and where we can position ourselves to look for some nice opportunities going forward. After, of course, we are having a historic Bitcoin correction to the downside. So for the guys who were on last week's stream, we did have a bearish perspective on BTC USD, and I hope you guys took some advantage of it. And in case you didn't, of course, better luck next time. So yeah, you can see it has been pushing to the downside. We have come all the way to the 70 level, about the 70 levels. But when you look carefully, we are off a weekly demand zone right now, right? We're off a weekly demand zone. And because the weekly is a very strong zone, you can expect some bit of reactions coming in from this. But we need to confirm if really we're going into a retracement, and we can only do that on lower time frames. So in case of a correction move, I'd want to target a correction all the way to this side before price either decides if it's going lower or going above, because currently we are in a weekly zone. So for as long as price is within this area here, this rejection week, I won't be wanting to engage a lot in Bitcoin. But it's on a weekly time frame, which is quite okay. It's just giving us a bigger picture on what the market may be looking into. So we can refine this and see what zone of it is still left that price could look to want to come and either mitigate or consume. So currently price is coming off this demand level here. As you can see to the daily time frame, this is the demand level price is coming off as well. But then I'm going to refine this all the way to this QM level on the daily time frame as the last level that price could definitely be bullish upon, right? As the last level price could definitely be bullish upon. And when I come to this, I'm seeing that daily, Friday gave me a bullish candle, and I would expect price to give me some bit of, correction move away all the way to the upside here, up to about at least 90, 56.6. I would like to see a correction move through today's price action intraday perspective to push me all the way there. This is something I would like to watch out for. So if price is to push me there, what do I want to expect? So you can see it's a correction move, right? You can see it's a correction move going to the upside, and this is a 4-hour time frame. So I have a demand level here on the 4-hour time frame to the downside that I want to mark out. I have a demand level here. That will be a very nice area to get some bit of bullish confirmation to target these areas here, the 90.56 level, 90,566 level. Price gives me a nice retracement going into the pre-New York. Get some nice trade around here to push me a bit into this, probably by tomorrow. Then we can form the high of the week before price goes a bit lower. Then in case price closes below this level, it's definitely going to target this remaining zone on the weekly area. And this price level is about what? What price level is this? Let me just mark it out and see. This is a 79,159. So in case of a closure below this level here, I would want to see price pushing me to the 79,159. And in case price comes to this, I'll want to look for a probably 15-5-minute confirmation to see if price can push me to the 95.66. So it's the 90,566. The figures are so many on Bitcoin. When I come into a 1-hour time frame on Bitcoin, we have been a bit of a correction move, right? So price failed to close to give me that shift to the downside. So what would happen in case price doesn't go down there? We have another kind of a wedge pattern that price could definitely want to use. We have that wedge pattern coming in around that. So I'll break out of that and probably a low time frame, a resistance level. We can take like a 15-minute resistance level here that we can see here. This is a very good range because this is a 1 hour time frame. So that should be a very, very good range to look for in case price gives us a breakout above that. So this is my 15-minute time frame. This is a 15-minute time frame. So we can probably see a break above that, retest, then a push to our 90,566 level. But beyond that, I can actually perfect this wedge pattern here to come all the way from down here. We can see our closure below this area, target this area where I would like to take the best possible. Probably buying opportunities, and either see if they don't get the confirmation in, we can see a break to the downside, target the 79 or the 71,156, 79,156 level. So that's my perspective on Bitcoin right now. Of course, we have a support level we'd like to break out because I don't really believe in only having a trend line breakout. I don't feel like it's confluence enough, you know. I don't feel like it's confluence enough. I'll need price to break out at least both our trend line and a support or resistance level, or trend line and supply or demand level. That makes more sense. That's more confluence for me. As a pure price action trader, it's something I always bank on every single time. So other than that, I would like to wish you guys for tuning in for today's session. I wish you guys a peaceful week, and I hope you guys don't miss tomorrow's session. If you haven't signed up for it, check the link in the description. Sign up for it tomorrow, 8 p.m. I believe it's time after most of us have been able to retire from our jobs, and then we meet tomorrow. Other than that, I wish you guys all the best. Don't forget to create your account today and take advantage of the Karibu bonus. Cheers.